this is what we're doing. Markets, governments, and technological innovation to address climate change. Huh? Wow. And this is how it looked to me last night. We'll see how far we get. First, I want to talk about technological change and climate change. And these are, but when I say markets, what I'm talking about are private markets here. Okay, so this is the private sector, and by market failure, the issue is what they're not doing. You should know that economists tend to start with the hypothesis that markets do everything right. And then when they don't, we call it a market failure. Okay? So the first point of view is that when you let the private sector invest money, invest resources, that if a number of conditions are satisfied, which are not in this case, that we would expect the investments to be made in a way that is efficient, okay? that comes up with new stuff, that produces products that people want, responds to price signals, basically. And if you have competition among firms, then they would be trying to come up with better products and cheaper products and so on. So so this is the economic perspective as we start out with, that would be good. And then in order to think about needing policies or needing interventions, it's important to figure out why that isn't good. And I have to say, I've spent my career looking at where it doesn't work. But I think that it's an important place to start anyway. Because when we look at government programs and government policies, particularly when government is trying to invest in new technology and do things, it's really important that they're not just doing the same thing that the private sector would be doing on its own. And there's kind of at least two reasons for that. I mean, in the United States, we have basically a private economy, okay? But usually the way these government programs work is that firms will come in and say, let's do A, B, C, and D. And from the government side, they want to be sure they're not just doing the turkeys, right? They don't want to do the things the private sector tried and failed. They want to be doing things that the private sector wouldn't do on their own. So that's why starting out by thinking of why it is the private sector isn't doing it is a good place to start, because then we can identify the right things to do. So this is sort of the policy angle of why we think about it. Okay, unfortunately, once we get through with market failures, the next thing we're going to find is that there's a lot of things that our government does very, very poorly. So that's the second part of the talk, is government failures. And then part 3 is the solution. This is the briefest part of my talk. And I'll give you, I mean, these are kind of some things I've been thinking about over the last 6 months. That's where we have to go. I mean, that's why we're having classes like this, is trying to figure this out, because the status quo is really not working here. Okay, this is, in the United States, I mentioned most spending, in fact, on research, development, and demonstration, as RDD, okay, is in fact private. And these are inflation-adjusted dollars. I think the reason there's a 0 in 1953 is because I didn't actually have any data for 1953, so starting in a little bit. We spend, even in inflation-adjusted dollars, we spend a huge amount of money on innovation, activities that are supposed to be involved in innovation. And the private sector is the lion's share of that in the United States. That's
in case you want to point out.
The federal government talks a lot, but it's been a long time since they've done the walk. They really have not increased spending on research, development, and demonstration. And this is total dollars. If you looked at this as, I mean, a good way to put this in perspective is as a share of GDP in the country, a share of economic activity, because we would expect spending on innovation to track GDP at least. We're supposed to be a knowledge-based economy. And the fact that the government here is flat means they've been going down, is the implication of that. So they've been doing less and less. This little yellow piece up here is money that universities put in on their own. Now, the universities actually do a lot of this work, but the money is coming from other people in general. The fact that it's now, this doesn't have much to do with climate change, but it's kind of interesting. The fact that it's now even visible on there is interesting. I mean, universities are raising their own money to do R&D much more than they used to in the past. And it's the same with the nonprofits. So this is sort of perspective here. Okay, so what's the problem? We have many problems. So the notion of investment would be, a way to look at this is say, well, what's the rate of return on an investment that you make? So you're putting in $10, what do you get? What are you getting out of it? Okay? And if you're a private company and putting in money into innovation, you want to be able to at least get as much back on it as you get from other kinds of investments, and you definitely want to get something back on it. The reason I put there the private is generally much lower than the social value. The implication of that would be that the private sector is simply not putting enough in. That there's a lot of benefits coming out of innovation that private firms can't capture. And here's why. Okay, and I guess when you get down to the bottom, in fact, there's been estimates of this for. It's a little complicated to explain how you do the estimates, but you can look at growth and productivity for the whole country, and how much money the specific firms are making who are investing money in R&D, and you find that the economy as a whole is responding by a factor of 2, 3, even 4 times as much. So you figure if a private company is putting $1 into an R&D investment, maybe they'll get back $1.20. The rates of return are very high, by the way, but society as a whole, if we looked at that, we would say that dollar was actually worth $2 to us. So there's a big gap, and that's kind of evidence that we're not doing enough. So why not? Well, R&D, of course, is a lot of it is information. People can use it without paying for it. This is the notion that we've got, it's what we call appropriability, that you may put in the money, somebody else gets to read your paper and use it. Okay? And of course, the main tool that we use in the United States to deal with that is the patent system, which gives the inventor rights over the invention. The patent system is beyond not perfect. It only allows the inventor to get back a fraction of the profits, as it were, that are going to society. For one thing, they're limited in time. A patent is only good for 20 years. They're limited in scope. There's a lot of ways that people can infringe it without actually paying you. There's a lot of reasons why it's difficult to litigate and actually collect the money. So patents are generally considered kind of weak tools in terms of making sure that private investors get the value in their inventions. You're from the engineering school, you probably hear that line a lot. Now you guys over there probably hear the opposite line. It's inefficient to have a patent system at all, because you've got this invention, it's done, okay? If you put a price on it at all, then the price is higher than, it's information. It doesn't, true, you're not making any money on it, but the value to society should be larger if everybody gets to use it. So it's kind of, you've written a book. Does it really cost, it doesn't, at that point, does it cost any more for 2 people to read the book than for 1 person to read it? It's out there. The problem with that line of reasoning, of course, is that you make no money, and therefore you can't write the book. But it is, as a practical matter, it isn't actually costing anything to keep somebody else from reading the book. And where this turns out to be a problem is we usually think of innovation as you invent something and then someone invents a better thing. So there's sort of 2nd generation, 3rd generation. And if you have strong patent rights, you help the 1st generation, but you're going to retard subsequent innovations, which can be extremely important. So from that point of view, economists argue that patent rights are actually too strong, not too weak. And what it comes down to is that this is just we can't do it perfectly. There's no solution to this problem that of how to arrange property rights in order to create incentives for private industry to do R&D. those are, that's sort of the key issue that people usually talk about when they say that there's not enough R&D being done. I've listed a lot of other things here because I think they turn out to be really important when we're talking about climate change. You come up with an invention, and it really might not be worth anything until somebody else comes up with an invention. Okay, so there's the famous case of Thomas Edison and the toaster, right, which was worth nothing until Wonder Bread invented sliced bread. This is actually not a joke. But you see similar kinds of things with lasers were sort of a toy before the invention of fiber optic cables. So it's very hard to actually know what the value is going to be of inventions. And one of the things that means is it's very difficult to borrow money in order to do innovative activity. So I'm skipping down here. I'm down to the financing issues. These sort of special problems mean that inventors have information that banks don't have. It's difficult to know there's a lot of uncertainty, there's a lot of risk. And the implications of that are that particularly small firms usually find it very hard to borrow money to do R&D. Big firms that have money, that have retained earnings, are more likely to be doing that. That might not be the best option, particularly from the point of view of climate change, if you think about this, because one would rather not be relying on British Petroleum and Edison Electric to be doing the R&D. You'd rather have some small firms that maybe don't have a dog in this race already to actually be investing. So there's real causes for concern about who's doing the investments and the fact that it's difficult to get money to do it, particularly when you're dealing with something, like I said, like environmental regulation, where there's a lot of uncertainty about who's going to use it, who's going to make money off of it, and as we'll see in a minute, whether anyone will make money off of it. The other thing I want to mention in particular is this one about price discrimination. Major inventions, what you usually find, companies that come up with something really important, something truly innovative, they have to usually make a whole lot of money, okay, to cover their investment costs. These things are expensive, and you got to figure out a way to make a lot of money. And even if you have a patent, it's not going to be good enough just to go out there and act like a first-year economics student and set a monopoly price. There's just not enough money in it. And what we find is that firms have much more complex strategies to try to make enough money to cover innovation. And what they try to do is identify customers, what we call price discriminate. They're going to be charging more money to the people who are willing to pay more. And this gets to be tricky because you have to figure out how to do that. You have to take your customers and put them in different groups. But if you think about drugs, it's a good example of this. Typically what happens with a new pharmaceutical product is that the drug companies will charge a lot of money to people in the United States. They'll almost give it away in Africa. They'll charge a little less in Canada, okay? And maybe just as much in Switzerland. And then, of course, they have to spend a lot of time making sure people don't re-import the drugs. But if you talk to the companies, and I'm not going to go overboard with this, but there's something to be said for what they claim. They have to make a lot of money. They're spending a huge amount of money on R&D. And if they tried to charge everybody the same amount, it wouldn't be good enough. Now, the drug itself is a trivial cost of production at that point, but somebody has to pay the price. And it tends to typically be the US consumers who are paying it. Over time, the same kind of thing happens. You find with a lot of important innovations, there's a learning curve and the price goes down over time. But you got to find some people who are willing to jump in at the beginning and buy them, who are willing to buy that first VCR at a huge cost, and then over time, the price comes down, you learn a bit more about it, more people buy it, but it's just, there's this issue that somebody has to be first. So these are innovation strategies that I want to come back to when talking about climate change. Yeah?
Is it worthwhile to distinguish between research on the one hand, development on the other? Because most research doesn't pay off.
At all, ever.
I mean,
yeah, go on.
I was going to say drug research, you may get 1 out of 10,000.
That's another issue about the risk,
Yeah.
which is, I mean, two things. So there's a lot of risk involved in this. Like you said, there's, in fact, something like overall, kind of in the general economy, most firms that are really doing research that aren't just changing the color of something, they figure a couple of home runs and that's it. So it's sort of less than 10% of the inventions are all of the profits. If you look at patents, the situation is much more extreme. It's a fraction of a percent of the patents are the ones that are actually paying off. That means it's a very, very high-risk operation that you're doing. So that's and that's why a lot of these problems turn out to be quite extreme when you're dealing with any kind of R&D, because there's so much risk involved. There's another distinction I thought that you were going with between basic research and development. Basic research being a lot of what universities do that never pay off, and it isn't expected to. But at some point, maybe it feeds into technology. And really what I'm talking about, what I was thinking about here was technology more than basic research. In the US, we don't worry about private incentives for basic research anymore. The government just pays for it. So
that was my next question.
There's just public sector support for it.
Because there's really no patent protection at all.
We patent. The University of California patents a lot.
Even basic research?
Oh yeah, but we don't make any money off of it.
Yeah.
So there's, in the typical university patent portfolio, there might be 1 or 2 patents that make money. UC for years had a patent on the, it's for doing genetic engineering. It's how you take apart a gene. I can't remember what they call this. We made millions of dollars on it.
Yeah, okay.
UCLA, some years ago, about 10 years ago, they invented a vaccine for hepatitis C and made a great deal of money. So every so often you make one. I've not heard of Irvine. We patent, but I can't think of anything we've made a lot of money off of. If they cover their salaries in the technology licensing offices, they're doing a good job. And then, of course, what happened to UCLA, this is the patent business. So they invented this hep C vaccine. It's great. And about 2 years later, somebody else invented one that didn't infringe. It was a different way of doing it. And then all of a sudden, they're making no money. So you really can't count on this as a practice. But so this is what I'm saying. Patents really are inadequate as a way to think about incentives for doing research, and they're not that great when you're even thinking about technological development. Although firms do it, but they do a lot of other things too. Let's see. Okay, so this is the economist's view of the world. So all of you have seen this graph, right? There's a supply curve, there's a demand curve. What we're trying to do is say whenever the cost of production is less than what people want to pay for it, the benefits, we should be doing that. And if we do all of it so that we're producing right up to this point where costs and the benefits are equated, that is the additional benefits that you get out of selling a little more covers the additional cost, then it's an efficient world. Okay, so what we're looking for is that triangle. Are you guys all comfortable with this? Okay. So effectively what I'm talking about here, a lot of what we've got is that I have an MD there for marginal benefits. It's just the increase in benefits from selling more units is what I'm talking about. That if it's systematically less than the social benefits, then we're going to have a welfare loss. Okay? Because we're not going to produce enough. Okay. The idea of a liquidity constraint, that's firms can't borrow money. So they've got a great project, the cost will be worthwhile, but no one's going to lend the money. Has anyone this quarter talked to you guys about the McKinsey report on energy efficiency technology? Doesn't ring a bell? I should remind me to send a citation to it. McKinsey Consulting Firm did a big project about all the technology that's out there that can save energy and do so at what they said was cost-effective way. And what they were looking at specifically was something that would give you at least a 10% rate of return in terms of the energy that you save by implementing the new technology over a 4-year period of time. So they're looking for short time horizon payback, reasonable payback, and they came up with a ton of stuff. And then they said, why aren't people doing this? Okay, this is Al Gore. There's all this stuff out there. You know, what's the problem? And one hypothesis, people didn't know about it, and that's something the government has really pushed, is the idea of information. But if I was on this committee that actually the National Research Council put together to take a look at this for energy efficiency, and we talked to a lot of firms and said, why aren't we doing this stuff? And they said, look, we got a capital budget. What they're talking about is all we can invest in a given year is a certain amount of money. And you're coming in with something that you say is going to save us energy. And these were guys like Dow Chemical. They knew what was going on. It wasn't, you know, it was not, I don't know, some builder or into thinking, should I put in a better roof? It was big stuff. And so we have 100 projects ahead of your project that we're not going to be able to do this year because we can't borrow that much money. So even big companies have to deal with the idea of limited investments in any given period of time. Anyways, just along those lines. A typical company has to worry along the same lines. This gets to all this uncertainty that you're talking about. A company will typically have a portfolio of R&D projects. And some of the best ones are going to have very high risk associated with them. And the way that financing tends to work in companies is we would expect them to choose the wrong ones, is what it comes down to. Every so often, a drug company will, by mistake, choose a high-risk, high-return project, but in general, they wouldn't be doing that. Let me go through this for you, because you've got it down there. This is not the return, this is the expected return. So I've already done a risk correction on this, okay, versus the actual risk. And what we expect to see with companies is that even though one might expect to make a great deal of money, you know, 1 out of 10 makes $1 billion, that companies are unlikely to be investing in those projects. So there's quite a bit of evidence along those lines. Okay, and this is, I'm sorry, yeah.
What's interesting about, just occurred to me is there's some problems with agency, you know, between managers' interests differing from owners. And sometimes in certain settings, managers will take on very risky projects just to get a big payoff. And if it fails, well, they don't have to bear the burden.
Yeah, but
and
usually not this kind of thing.
No, it doesn't seem to fit here. I mean, the payoffs would have to be so big, perhaps, that...
They certainly do that. I mean, this is a lot of the criticism of the banking meltdown over the last few years, is that when these hedge fund guys started losing money, they figured the worst they could do would be to go bankrupt, and so they start betting the farm. Right. Boy, you sure don't see that among R&D managers.
No, yeah, that's curious.
Yeah, it is. Yes, why it is they'll take risk some places and not take risk other places. It is interesting. Okay, the other thing I was trying to illustrate here is this innovation. As I was saying, if you look over time with a lot of important innovations, they get cheaper over time. We learn better ways of doing it. More people are using it, we can take advantage of scale economies. There's a lot of feedback that goes on. And so over time, what I've got there is what you then tend to see is that's the diffusion curve. As more people are using it, the price keeps going down. And so we've got this phenomena where typically the cost of production is going down over time, the demand is going out because the products are getting better. What I was trying to get at here is the issue that I told you about, that we sort of expect firms to discriminate over time. And so for the same reasons, what we expect companies to be doing is trying to price discriminate and find the consumers early on that they can charge a lot to, and find the parts of the world where they can charge a lot of money. Now, let me see this. Okay. I've almost used up, oh, it's only a half an hour. Okay, good. I'm doing good. I wanted to, this is my introduction to R&D. Okay, so we see here, there's a whole series of problems. Now, what does that have to do with this class? And let me try to explain why I think these raise some really serious problems, specifically in the context of climate change. Okay. So we got these market failures. We got standard market failures for R&D. For climate technology, we also have the fact that we don't have a market at all, right? We're trying to do something that's going to cut down on CO2 emissions. And from the point of view of private firms, today, in the United States, there's no market. There's no market at all. So where most innovation is supposed to come, what we call demand-induced innovation, it's coming from people who, from companies who want to make a profit because there's a market, there's no market. Okay? And if you ask, so the policy involved in this then, if you've looked at all at, I don't know whether you've done this yet in this class, at some of the costs that have been estimated of what it's going to cost to do something about cleaning up carbon dioxide, even the pessimistic models that people have done of these assume there's going to be some technological progress, that it's going to get cheaper to do it. We have a series of models that try to estimate what these costs are. There's something called the DICE model that you might have seen. There's the DICE model. Anyway, they're models of the economy, and they sort of say what's going to happen to economic growth, what's going to happen to agricultural production. So you put in problems with climate change, you put in the cost of cleaning it up, and you try to come up with some number of what it's going to cost to do something about this. And the cost, if you tried to do something about it today, the cost to the economy would be astronomical. I mean, it's sort of a huge hit because, I mean, start thinking about this. We can talk about windmills and we can talk about waves and all kinds of ways to produce electricity. But right now in the United States, 80% of our electricity is coming out of fossil fuel. And you want to shut those down. You know, it's sort of, you want to put carbon capture and sequestration on them. At this point, the sort of money you're talking about is at least a 25% penalty in the energy coming out of the plant. So the assumption behind these models is we're going to get some technological progress and it's going to get cheaper to control this stuff. Why are we going to get technological progress? Well, very often, if you look at these models, they're going to talk about business as usual as if there's technological progress going on. And it's difficult to understand where that's coming from if you're not, if it's supposed to be coming from private industry, and private industry is making no money on it. So we've run up against a wall here, basically. There's no market for carbon dioxide. Therefore, there's no reason to have private investment. Until we get a lot of investment from somewhere and drive the costs down, we're probably not going to have any serious kind of public policy to deal with it. What the sort of in policy, what people are looking at then to deal with this is a two-pronged approach. One is, okay, let's get a market, right? Let's get some kind of market going for carbon dioxide, however pitiful. So this has a lot behind, you know, why people who worry about technology want to get something like a cap and trade program, even if it's a whole lot of permits, so the price is ridiculously low. I mean, they just want to get it in place. So there's something you can point to and say, we've got a market for carbon dioxide. That's one side. And the other side is people will say, okay, the private sector is not going to put money into this. They never put enough money into R&D. They're certainly not going to put money into this one. Let's get the government to put it in. And just a few weeks ago, and this was, I guess, about the time when it became apparent that Congress wasn't going to do anything this year on the environment. Probably Congress isn't going to do anything next year either. there have been a number of reports that have come out just in the last month, really pushing the second piece of this, the federal support, because even though there's wide consensus that the way to approach, maybe not basic research, but certainly technological change is, if not by the private sector, with the strong cooperation of the private sector, that's who knows how to come up with stuff that people will actually use. That's who knows how to, come up with, pay attention to cost. I mean, it's actually difficult for NASA to do this. But if that's not happening, then we have to think of some kind of alternative. And the alternative that is generally discussed is, okay, let's get the public sector to pay for it. I've listed 3 market issues. Cap and trade, has that come up in this class? Okay, the basic idea here is that actually I have a picture a little bit later on. We have a certain amount of carbon dioxide going into the atmosphere. We want to go back. Okay, so we say, okay, well, the way the proposal that was in Congress worked was they identified, it was mostly just big industry, big emitters of carbon dioxide. I expect the university was big enough to fit in that, but not you with your car, okay? And must have been you with your car. Refineries counted. So this is sort of 80% of the emissions in the United States. And they say, okay, we're going to have a certain number of permits. In order to emit carbon dioxide, you have to have one of these. And then they issue the permits. And if you don't have a permit, you have to clean it up. Okay? And now the permits trade. And what's interesting about this mechanism for trying to deal with pollution is that we would expect that if there's a market for these pollution permits, the price then, if you want to buy this permit from me, and I'm willing to sell it to you, that probably means it's cheaper for me to actually clean up my emissions than you, because you're willing to pay more for the permit than I am. So if I don't have a permit, I have to get rid of my carbon dioxide. Okay, but maybe it's cheaper for me to clean it up, and then you have the permit. You can keep going out with your carbon dioxide. If the trades are going on, what that should mean is that we're cleaning it up in the cheapest way that we can for the group of us. Because all the cheapest abaters sell their permits to all the people for whom it's more expensive. Okay? So this is why the cap and trade system is thought of as a good way to try to control carbon dioxide, because it's very hard to know who's going to be cheap and who's going to be expensive, right? And then the price of the permit gives a signal to an inventor, right? If he can come up with a way of getting rid of carbon dioxide emissions that's cheaper than the permit price, then someone will buy that technology from him instead of buying the permit. So this could give you then a market that allows you to make a profit on emission technology, right? That's the idea. A tax on pollution can work exactly the same way. That if we say, okay, you have to pay $1 for every ton of carbon dioxide you emit, or $25, then if it's cheaper for you to clean it up, you'll do that. If it isn't, you'll pay the tax. And in theory, it can work exactly the same way. You guys have, if you haven't seen these before, this is I'm just throwing this at blind to you, but do you see problems with those so-called mechanisms for controlling pollution? There's a big assumption underlying them, which is that the government knows whether you're doing it or not, that they can actually enforce this business. Big assumption. But, basically you got to start somewhere. The third one I have up here, regulation. This is the traditional way that we've control pollution in the US, it's just to tell people what they can do and what they can't do. And that is, the nice thing about the other two, what are so-called market mechanisms, is that they give people, first of all, an incentive to clean up, maybe even clean up more than the standard, because if you clean up extra, you can sell your permit, or you can pay even less in taxes, so it sort of gives you an incentive margin. And it gives us that ability to trade that I mentioned, so that the cheap people are cleaning up and the expensive people have permits. So there's sort of a reason to prefer the first two to the second. As far as enforcement goes, they all suffer from the same problem. If you set a standard, you have to be sure people are following it. If you have a permit system, you gotta have a permit. I mean, all of them are difficult to actually establish and make it work. But that's kind of the direction that seems like it might help, at least, coming up with some technology. And without any kind of market, it's very difficult to really get industry excited about doing any kind of R&D work. But if you give them enough money, maybe they will. It's difficult to get the focus, is what we're worried about. Okay, there has been a lot of research about government R&D. Okay, so now we're in this position where we say, okay, let's try to do a market, even though it probably won't be good enough, but we'll try, and then we'll also have some government programs going along with it. I was at a conference a couple of weeks ago where there was a lot of very unhappy discussion about what's been going on with the international treaties to try to control carbon dioxide, let alone just in the United States. And what struck me as a hideous consensus coming out of the room, which is, we're probably not going to get this treaty. Let's just try to do some research until at least it gets cheap to try to control it. And the reason that I got very distressed is because this ignored the whole problem of telling the government to do research on something in which there's no market. So it kind of gets to what can the public sector do? As I showed you on that graph, the public sector has done a lot. They've been doing research, great deal of research for the past 50 years in all sorts of areas. What do they do well? They tend to do the projects that they've undertaken that have been generally considered successful are, first of all, when they're doing R&D in support of their own activities. So that's the space program, defense programs. It's for themselves. Okay. How many of you have heard of DARPA? DARPA was a unit within the Department of Defense that supported research projects, Advanced Research Projects Agency. And it has been held up as a model of effective government support for R&D. A critical component to remember, though, when assessing DARPA is what they were doing was R&D for themselves. So they weren't trying to sell it to anybody else. They were just trying to sell it to themselves. It makes for much less picky consumers than you would otherwise have. And so we can argue about this later. You're looking at me quizzically, but I think that the advantages of that structure have been way oversold because people have thought about trying to deploy it for use in commercial technology. It never has been done that way. So that's sort of one category of things that work really quite well. Second category, when they're trying to deal with commercial projects, three areas where they've been successful. One is when they try to do it joint with industry. So this is, and it's by no means all of them that have worked, but at least setting up a program where there's a cost sharing mechanism, something like that, yeah.
I wanted to ask, when the government takes on these R&D projects that are possibly too high risk for the private firms to take on, doesn't that really take away a lot of the incentive for the private firms to do anything? Like they say, well, the government's gonna like find a, if the government's gonna solve this problem, why should we, you know, use our capital to try and find, you know, a solution? And but then that seems like that could kind of snowball. So then the private sector would do less, and the government would need to do more. And I don't know.
What they usually do in the United States is they almost never do it on their own if it's going to be a commercial technology. Mm-hmm. So you're doing a joint with industry, and then they spend a lot of time looking at the intellectual property rights beforehand. And a lot of the projects that they've done, they've signed over the rights. So there's money coming from the government, but the profits are pretty much sticking with industry. So that hasn't been an issue. What has been an issue is when the government has decided to do a project. A case that I can think of in particular had to do with communication satellites. So they had a competition. This was about 1970, and there was a competition for the next generation of communication satellites, and a bunch of companies bid on it, and one company won the bid. Actually, it was a local guy, Lockheed Hughes. It was actually an Orange County company. It was sort of interesting. So there were 5 companies or something that bid, and one won, and the other 4 sued. I mean, they were uninterested in competing with this firm that had gotten the public project. So they said, this is unfair, this is government interfering in private industry, they're going to put us at a competitive disadvantage. And they got the program canceled. So it actually, the problem is usually much more trying to maintain a program. If private industry sees that there's a commercial opportunity there, then to get it going. Now, they learned. The next time they tried to come up with a project, they got everybody together in a collaboration. And then we certainly worry about it because what does that mean for the guys that aren't part of the collaboration? They're definitely at a disadvantage.
Yeah, I think last week we had looked briefly at what was it? It was the fossil fuel place where Dabda was doing research, like
the future gen?
the fuel cell NFCC or something. And,
that's here. That's here. I can't.
Yeah, and I thought that was really interesting because it was supported through government programs, but then there were partners, which were primarily the auto industries, but they didn't actually have to pay anything.
Oh yeah, they do.
I think he told us that it was just Toyota that had contributed, and everyone else just got free access to the information. But maybe he didn't have it quite right.
Very unlikely.
Yeah,
very unlikely that Toyota is going to be interested in just giving it away to everybody else.
Exactly.
They got to get something out of this deal. Now, since what he's doing is pretty early stage research here on campus, so it might be that Toyota figures what companies get out of working with universities is pretty interesting. A lot of what they're interested in getting usually is access to students. So they care less. They're unlikely to fund what they think of as strategic research that's really critical to their competitive position because other people are going to learn about it. They can't trust us to keep a secret. But sometimes if they do the early stuff, they'll get people like him to work on it that they might not be able to get otherwise. And they get to come in and talk to them, and they get to hire their students to be interns and things of that nature. So there's a lot of things that are not commercial.
Okay.
But when it comes to, so this sort of gets to this actual public goods. That's part of what we're talking about. If what the government is doing is something like carbon capture, maybe even fuel cells, for which there probably isn't going to be a commercial market, that there's only going to be a market because the government is setting it up, then they're not going to worry so much about how it might be unfair. What we observe, looking at the history of government investment in technology, in energy technology in particular, is a huge amount of instability, that they do stuff and then they cancel, and then they, nuclear power, big deal, and then all of a sudden, no, we're not going to do any nuclear power at all. So it's more, the problems that come up have more to do with things like the satellite story, where promising ideas flounder because the government can't keep a commitment to actually keep these things going. One of the reasons they can't is when it's political. These firms are coming in and complaining about it being unfair, and that very quickly causes programs to get canceled. But if what they're dealing with is something that is truly, something like air pollution, that they're probably not going to make any money off of anyway, but they might have to respond to a regulatory regime on down the line, then you can see some cooperation happen. This is good news for climate change. This makes it sound like it's the kind of thing that maybe the government could be effective if they put some money into it. More money. They tend to waste a lot of money. And when I first started studying this, I was very indignant at all of the waste, fraud, and corruption in government programs, and then I decided to learn to live with it, because you're not going to get a government program unless you're paying off all these guys. I mean, there's just a lot of waste going on here. So you can either take it or you cannot take it. Okay, that's sort of what it comes down to. And if at least they're doing some of the projects that wouldn't be done otherwise, so they might have a high payoff connected to them. The Department of Energy is famous for coming up with these electronic ballasts that are now everywhere in the country. It was a small investment. It's a huge savings in electricity, and actually an enormous commercial product at this point as well. So that was just one little piece, and at the same time they were blowing a fortune on a Clinch River breeder reactor. Sort of going, I mean, there's nothing we can do. So, but if you don't have a lot of money, it's unlikely you're going to have a big enough portfolio to get something going. The government programs that are fairly small tend to come up with nothing at all. The ones that are reasonably sized sometimes have a hit. Okay, so I have a couple of examples here. Let's see. Some energy examples that worked. I probably won't go through them now, but they can do stuff. It's not hopeless. So let me finish this one slide, and then we'll take a bit of a break, okay? Because I'm trying to tie it into climate before we move on to specifics. What do we find? First of all, pricing emissions. I don't know if maybe that would be great. Whether it's crucial, maybe this is an overstatement. I don't know if we really need a cap and trade policy to get a move on this. Certainly we can try to go without it. It looks like that might be what's happening in the United States. Subsidies. In general, public subsidies are important to this process, but there too, as we're going to see as we go on over the next hour, we probably need more than that. There's too much going on. The issues then that I want to start addressing when we come back from our break, okay, is why is it we're going to have some, what is the problem going to be with prices from this policy? Why is it that we need so many different incremental innovations, and whether we can do something about these other issues? So I have actually, let's see. Okay, I'm gonna stop at this point. How do we do it? We just sort of go out.
Just take like a bio break, 5 minutes or so, and
Did you guys all bring your lunch? Is that helpful?
maybe the restrooms, or anybody who eats usually brings their own lunch.
I see. Okay, we'll just take a quick break and pretend to eat. Do you have any?
they might be the same survey.
Oh, okay. Yeah. That's very interesting.
It was a perception thing. I think this was in, you know, they got my.
How you doing, Joe?
I'm good. How are you?
Okay.
Got stuck in Texas, huh?
Yeah.
What happened? I wouldn't think a flight out of Texas would be.
Yeah, of all places.
Yeah. Whatever happens there.
Flight's totally sucked. It's just like, oh, sorry. It's like, what do you mean?
I
Sorry.
was in China for an IPCC meeting and.
Yeah, I was on a plane once and I heard that, like, we were all literally on the plane and they're like, oh, the plane's broken. Please the plane. And I'm like, okay. So, yeah, it was like a mad dash to get
And then you fly standby, and it's just a disaster.
Totally, you have like plans for, you know, whatever you're gonna do and then you totally get messed up. And it's frustrating.
Oh, yeah. Yeah,
Like,
yeah.
the worst cartoons, there's nobody to be mad at. You know, it's always like, oh, I don't know what happened.
It's just happened.
Yeah, just magically,
I
like.
think one of the most interesting.
And like, you know,
about China.
300 other people are in the same situation. So you can't
You know,
really.
what's happening on the planet in terms
And you're
of
all stuck somewhere you don't want to be.
pollution areas of pollution and, you know, outsourcing
As you
to
read
other
things.
countries. and all that.
Good, I've been really busy with
And
like,
the, you know, the
in terms of
developed
teaching, I
areas
have
versus the undeveloped
like the main academic essays due
Okay.
next week. My students are like, they don't leave me alone now. I don't have time for you. So, but other than that,
Basketball team's still doing good?
basketball practices have started,
Awesome.
which is also a stressful addition to my schedule. So now I have to entertain, you know, 12 teenage girls for 2 hours every day.
Oh, man. Does that mean you have to spend time planning on how you're going to do it?
Yeah, yeah. So yesterday we learned to play and practice all kinds of stuff. They're not very good. And part of it is I never played lower level basketball in high school, so I have no idea what to expect out of them, what their level of seriousness is, or I have 2 staff students, so there's like an interpreter, and
Okay.
the one girl has no idea what tackling is, or what point guard is,
Oh,
or why we refer to certain players with certain numbers, so it's like a, I don't know.
so you have a range of talent, too.
We have subsidies, we have a bunch of policies that we hope we're gonna wind up putting a price on carbon so that we have a market and we can start getting some innovation. And let's sort of put it together. So the first issue is demand-induced innovation, as I was saying, is typically what happens, the way we assume people are gonna respond. Okay, so this is Constellation is gonna build a nuclear power plant because they think that there's gonna be a demand for low carbon electricity because there's supposed to now be a price on carbon dioxide because we're gonna have a cap and trade system. Okay? And if they do that, this will be the first nuclear reactor built in the United States in 40 years. Take account of new technology instead of the old sort of dinosaurs that we have down on the coast here in San Onofre. But the problem is that this demand that we're talking about, the demand for low carbon technology, depends on policy. Okay, that's what I'm calling policy-induced demand. So this is our first issue. And policy-induced demand comes and goes. It's a real problem. And if you're a company trying to make an argument for an investment, and you say there's going to be demand for low carbon fuel or low carbon technology, the boss says, why do you think so? And you say, well, you know, we're going to have this cap and trade system. And then you start thinking, are we really going to have it? What's the probability that we're going to have it or not? And your So a normal kind of innovation would be for a color TV, and you say, people are going to really like it. Okay? An iPhone, it's technology that somebody actually wants to buy. Not because the government has set up a regulation that says that you have to buy it. So the whole notion of policy-induced demand just introduces an enormous amount of uncertainty into it. And that's what we're hanging. Thank you. So this is already an issue. But let's suppose we even have it. Cap and trade, which I gather you did hear something about in the context of IPCC. So now the idea is everybody has, you can do a permit or you can abate your technology. Great. From the point of view of innovation, this is by no means great. It means that instead of buying your new technology, you can just buy a permit. So go back to what I was describing as innovation strategies, right? We want some early adopters who pay a whole lot of money for it. We want to be able to price discriminate. And now all of a sudden, we're limited. There's a perfect substitute. Instead of the technology, all you need is a permit. There's nothing out there that looks like a VCR, and there's, you know, in the early days, there was no other way to have that kind of technology where you could record for your TV and start playing it back. There's a cell phone. This is a unique device. You can go walk around with it anywhere. There's no substitute for it. Landline telephone is a really different kind of thing. And the big, successful, expensive innovations, if you put your mind to thinking about them, they're providing a different service, not just a cheaper service. And all we're talking about here is cheaper. So this is really lousy, right? It's very discouraging to think about how this goes. And really, what I'm doing here is, I'm sorry to be so depressing, but I see these models that people have come up with that assume some rate of technological innovation. Like I said, I think we're going to have to think of something better. Because we're not going to be able to, we can hope that the government is the early adopter. That's sort of what's going on here. Let's get the government to buy a bunch of solar cells. The University of California, maybe we could talk them into doing some energy efficiency, lean buildings and so on. But there's nothing along the same lines as we've come up with a new medicine for AIDS and we can charge $10,000 a dose because there's no option for this. At least at the beginning, recoup some of our investment, and then we'll start selling it cheaper to other people. Or if you don't like that, you know, it's sort of the cell phone. There's something unique about a lot of innovations that have to do with why they were first done. Nuclear power, I find a really interesting case because originally the technology was used, well, it's wrong, obviously, but the kind of stuff that we have was used in submarines. And there's really no alternative. If you want a submarine that can go down under the water for 5 years, which they can do, you can't do that burning diesel because you got to have air, and you can't do it at all. So there was the Navy that would have paid anything to be able to do this. Is kind of the way it looks. That's basically not the case with carbon efficient technology. So we're in a different world. If you're thinking about it from either the cap and trade point of view or from the tax point of view. That in both cases, there's an option, there's an alternative. I think this raises an interesting issue, which is I sort of went over kind of quickly. We think about market-based, economists like market-based incentives because they give you an efficient way of dealing with problems. The traditional way, which is just regulating it, we tend to dump on it, so it's very expensive. Now I'm not so sure, thinking about this, I'm not so sure that market-based systems are going to give a decent incentive to innovate for carbon-based technologies. I think we might just have to go in there and say, we got to do it. And if you don't, well, you just got to do it, okay? Because we can't, we're not going to be able to get the incentives we want to do the sorts of innovations that we want. we're dealing with a different world. And it's not so easy.
So you're saying a tax system, no tax system could be devised that would
Maybe a combination. Well, I don't know the right way to do this, but I would say a tax by itself is not going to be the silver bullet that people, or cap and trade. Either way, I mean, there's real advantages there in terms of what we call static efficiency. Okay? Doing the best job with what we have today, we can do using these market mechanisms. But as far as innovation goes, they're not sufficient. I think we need to have more tools to bring to bear on this because it's not good enough.
Well, Porter out of Harvard has this theory, that hypothesis that you can, help me out here, Sarah, you can use environmental regulation as a push to firms to innovate. So there's no tax there per se, it's more regulation, right?
Well, that's what
Yeah.
huge amount of innovation followed the Clean Air Act, which had nothing to do with the tax. It had nothing to do with cap and trade. It just said you gotta cut it.
Yeah,
Okay, clean it up or you're out of here. That's
So
it.
that's a capital R regulation. I mean, it's a real constraining kind of legal imposition.
Yeah, or some way to make the fines huge, which is what they did. Okay, so the Clean Air Act, Clean Water Act said, clean it up or you have to pay this enormous amount of money, way more than any sort of permit that we're talking about. And so somehow we gotta get something much stronger than just the sorts of permits because it's not enough money.
What events occurred, a political environment existed to allow Clean Air Act to pass?
Who here does politics? You're working for Gentlementum?
Yeah.
I'm putting you on the spot.
What was the question again?
How did the Clean Air Act get passed?
Yeah. I mean, what was the political wherewithal to get this
Right.
imposed?
I think, I forget which court case it was, but there was a certain court case that really pushed it forward, that they used that holding to streamline. I took his environmental law class too long ago, but I could definitely answer that question if I give it some more time. But there
They
was
might not have
certain-
known how expensive it was going to be. It might be part of it. Ignorance can go a long ways. Anyway, it's I'm leery of hanging the dynamic efficiency, that is technological progress, on market mechanisms. Cap and trade arbitrages. Here's another one. If you look at the models that estimate the cost of climate change, they have these global models. Okay? And the assumption there is, the good thing about cap and trade is good, pollution trading is good, if there's wide discrepancies in the cost of abatement among different people. So it might be really expensive for us to do some of this cleaning up in Manhattan. That's okay. Let's buy some permits and get the Brazilians to clean it up, and we'll put in some stuff there, right? China has phenomenally dirty coal. And we can, for the same amount of money, we can do a lot more cleaning up in China than we can do in Nevada, okay? So that's what cap and trade is supposed to get us, and that's why there's these huge differences in the cost of doing something about climate change if we have a global trading system than if we have a narrow trading system. Okay, that's the theory, yeah.
So are people talking about a global trading system?
Yes. The way it comes in the United States is what they call offsets, right? So there's going to be maybe a certain amount of trading that goes on in the United States, and then, well, the Europeans have already done this, and then there's the possibility of, you have to go through a slightly different special procedure, but instead of cleaning, you have a certain amount you're supposed to clean up in Norway, and you can buy your way out of it by proving that the Russians have done something. So effectively, what's going on is you're buying the permits. You're getting the Russians to clean up pollution. That generates permit equivalents that you can then use to not clean up in your home country. Okay, so that is the way that the European system was put together. There's actually been, speaking of enforcement, that's been even harder to enforce, to know whether it's really going on in these other countries. But the overall global models that you're going to see that have some price estimates in them assume that the pollution is being cleaned up where it's cheapest to clean it up.
What's the problem with enforcement? Is there measurement issues? And
Fraud.
Oh, it's fraud.
It's straight fraud. But,
So it sounds financial reporting at first.
nothing subtle about this.
Yeah, okay. That's
They say they clean
reassuring.
up, and they don't. Okay, it's sort of straightforward. But in any event, this is kind of the theory behind it, is that what we'd like to be able to do in order to cut down on cost is to go where there's opportunities to do that. Now think about that from a patent point of view, okay? We now have some intellectual property, and what we've always done with our patents is charge a lot of money in the United States and charge a little money in Africa for the same product, something like that. That's how we're price discriminating. The way we do it is because we have a patent that allows us to limit reimportation back into the United States. So if the Indians want to make some generic drugs, they can't sell them in the U.S. They're not allowed to. The ITC will stop that. And the customs guys have warehouses full of what they call pirated goods, which is things that infringe U.S. patents that we then don't allow to be sold in the United States. And companies can't sell them unless they pay a licensing fee to the patent holder. Okay, so it's sort of perfectly reasonable. If you want to buy an iPhone from Japan, which we do, by the way, because Apple makes these things there, okay? The company that's making them will pay licensing fees to U.S. patent holders. And then this is enforced. But what we're talking about doing with this global trading scheme is something that will really undermine the structure of property rights. Because imagine, and the sorts of things that inventors usually do, right? So you've invented a way to, for post-carbon capture, let's say. So you can hook this up to your power plant, get the carbon dioxide out of the air and bury it in the ground, okay? Or out of the exhaust coming out of it. And what you would typically do with this as an inventor is charge a lot in the United States where people have money and sell it pretty cheap in China, okay, where they don't have that much money. And even cheaper maybe in India, okay? But now what's going to happen is a company, let's say Edison, is going to say, well, I can buy this and install it in my plant in the United States. Or I can get these guys in Malaysia where they don't have to pay anywhere near as much for the technology because that's, you know, if we're price discriminating, it's cheaper in Indonesia. If we're not, they're probably not doing very much about our patents anyway. But let's say, you know, if you wanted to price discriminate, what would happen is it's cheaper in Indonesia. Let them clean up the pollution, and I'll buy their permits, and I won't bother doing it here. So what it doesn't mean, what this means is that the company is not going to be able to discriminate prices for the technology in different parts of the world if the trading system is really working. They might be able to enforce their rights. That already is kind of difficult. But they could say, you can't buy a permit from these guys in Malaysia because they haven't paid a licensing fee to Westinghouse for the technology. You could say that, but it's going to be very difficult to actually charge a different price in two places. Once they have a legitimate ability to buy the technology, then they'll be able to trade it in the trading system. So we've run into another bind, that the way that the cap and trade system works to minimize cost today makes it more difficult to implement strategies to invent better technologies for tomorrow. It's hard to figure out a way around this, except by saying that we're not going to have global climate change. We're not going to, in fact, allow trading to happen all over the world. That we're going to limit trading much more than that, and then we have to come to terms with what the cost of that's going to be. So I think I don't see a way around this. But Joe Demento may be able to. He's actually quite a bit smarter than me. Okay, the third thing I have up there is something that actually quite a few people are worried about. Let's suppose you even invent this thing. So here you are with the free carbon capture and storage system, and you want to make some money off of it. And at this point, the government really wants this used because they want to be able to control carbon dioxide, and they want it to be not so expensive that it's going to hurt the economy. The reason that you get to charge more is because the government has given you a patent. So you have to ask yourself, are they going to actually protect that patent? Or are they going to ask you to license it at a cheaper price in order to get it out there? And the government is going to be in a bind. The incentives are wrong, especially if times are tough, but they want to do it anyway. And this is the kind of thing that inventors worry about because, again, their ability to charge a lot of money is completely dependent on the government upholding their patent rights. There are some, actually very few cases in the United States that the government, what we call march-in. The government always has march-in rights. They can come in and take away your patent if they think it's really important. There's very few examples of that, although it's happened. So they did force, I think it was Merck, who were charging $10,000 for an AIDS treatment in the early days, and NIH came in and said, you can't charge that much. Now, they didn't go through the legal procedure. The company settled because they didn't want to go to court. They didn't want to test it, which was very reasonable. And then they started selling it at just a fraction of the cost. And by the same token, some of these companies, again, especially with AIDS drugs, have been really told, if you don't give it away in Africa, you must. You must let them produce it. You have to give them the formula. So the rights are not, it's not the same as your farmhouse. You know, it's something that the government decides how strong it's going to be. And there's a lot of concern about what would actually happen if you invented something wonderful in the climate area. And it turned out to be that it would help the whole world with climate change. Are they going to actually let you make money on it? So we worry about that. It would be very easy for them to undermine your rights by, you know, changing the permit market. So we've got some serious problems here. This is what I recap, okay, but let me get down to the bottom here, the drug analogy. Imagine what cap and trade is like is as if we had no laws at all against drug reimportation from other countries, okay, first. And then, and I forgot, I didn't get to the banking part of it. The cap and trade systems that are under consideration, usually another thing they do to give some more flexibility to companies who are trying, this is the idea. You have a company, if it makes new investments, then it can cut down its carbon dioxide emissions. Okay, and it takes a lot of money to make those investments. So what they're going to allow companies to do is what we call borrow and bank. So they have, let's say they have 10 permits today, 10 permits next year, 10 permits the year after. But the investment that you're going to make comes all at once. So what you want to do is maybe do the investment next year, and then you will clean up twice as much the year after. Okay, so what you actually want to do for carbon dioxide is 20 today, 15 tomorrow, and then 0 in year 3. And you want to be able to use your year 3 permits up front because you're not going to just go down a little bit. You're going to have a big improvement once you make your investment. So they're allowing companies to move permits across time. And then if you clean up extra today, you can bank your permits and sell them later. So the idea is to give companies some flexibility about their investments. If you try to charge the early adopters more for the technology that you just invented, okay, and then go down this learning curve, it costs less than 4 years. Well, what all the companies are going to do is wait until year 4 to do it. And then nobody is going to be the early adopter. So the flexibility that we're trying to build into the permit system to allow for rational investments, again, makes it very difficult for innovators to use standard pricing strategies to recoup their investments. So it's yet another difficulty that we're having Okay, so what can we do about this? Well, what I would say again is these are real suggestions, and then I'm going to get to something that's a little more at the lunatic fringe of suggestions, is we can't let the best be the enemy of the good here. Our perfect trading system, our perfect cap and trade system looks good for minimizing cost. It looks good on paper, but we can't, it might be the wrong thing to do. So it's sort of like saying a patent system. Again, it's not perfect, but we've come up with a compromise. Weak rights, some diffusion, some monopoly. It's sort of in between. And I think that we have to think about cap and trade the same way, that we're going to have to limit more than we would like. You know, the perfect trading system is not the right thing to do from the point of view of innovation. I think that we might, I am really excited about what's going on in California. Most people who look at climate change would say, what can California possibly do on their own with AB 32? I would say that we have to come up with strategies that we can do on a small scale, that this may look really inefficient, but from the point of view of technological change, that's a way that we can try to get a handle on this, because there's going to be, you know, and then another thing, so it's very much we have to think about second best instead of perfect here. And I don't have on the list, because I wasn't thinking of it until we started discussing it, the idea of sticking with some of these regulations that economists so tend to denigrate all the time. That might be one of the issues that we have to keep in our portfolio here.
I did a little refresher on the Clean Air Act, and it seems that I remember that it was pushed as a bipartisan issue and pushed by both parties. It was a democracy-led Congress, so that was one environment, but it's also gradual. So in 1963 it was adopted and didn't have regulation on mobile, automobiles, and then in 1970 it regulated automobiles. So it was kind of like a gradual progression, so it gave time people to innovate. And it started at the federal level, and then they started with state legislation. So I think it was kind of like they knew it was coming, and so there was innovation. So it was kind of a unique, and it's kind of every time they've added a new amendment, it's been a doomsday side, like, oh, we're not going to be, it's going to be too expensive, but it's always innovative. So I think the gradual progression of the Clean Air Act, it might be an indicator to how things can happen. You know, starting maybe at, even if the California is a small scale, it can. People know that it's out there and it's happening, and then money can be made from innovation. So it's a good example, I think.
Think about it.
So anyway, I was just.
Yeah, I think it's also interesting between the Clean Air Act and the Clean Water Act versus what's happening here is that both of them were led because they were pretty severe toxicity issues and health risks. And that's the trick with the CO2. We've come to accept CO2 as a part of our life, you know,
well,
and not, the argument is we breathe it or whatever, it's just not considered at the level of toxicity, although it is.
For the United States today, it's not.
Yeah. So I think
it's not.
You say it is not?
It's not.
Yeah.
Not for the U.S. today. It isn't.
And I think there's some breakthrough regulation with the EPA, the first time that they did actually regulate greenhouse gases, and that was, it had to be tested in the courts or wherever because it kind of was overstepping the bounds.
Oh, sure.
So I think that's the difference between both of those, Clean Air Act and Clean Water Act.
But starting small, this is something that politically there's an issue here too. I'm thinking even just economically, there's a reason not to start with the whole thing because it's going to be a problem. I think I see negatives, actually, economic negatives with the whole thing, even aside from trying to get the thing through.
I think the no vote on Prop 23 is a big thing for us and for the nation.
Yeah. Does anyone here know specifically what, Susan, have you heard? I was in Sacramento a couple days ago doing something else with the CEC, and they're really worried about Proposition 26. Okay, So the Air Resources Board can get started on 32 because they have money to do the, what do they call it, the inventory, at least find out who's doing what. But if they want to do any of the kind of the cap and trade kinds of things, there was going to be a fee on automobiles that they were planning to do, carbon dioxide fee on automobiles, that's now probably all requires 2/3 vote because those are the fees that Prop 26 is required. So we're worried. We were worried at the Energy Commission because they've got a program called the Public Interest Energy Research Program that is supported by a fee on your electrical bill. The public interest charge, I bet you guys are funded from that. Samuelson certainly is, the fuel cell guys are. And that has to be reauthorized for 2/3 fee too. So we're actually good news, bad news on the election. But we'll stick with good news. We have to have some somewhere, right? Okay. Here's my lunatic idea. At least it's something different. I have to go on this. This is actually, I'm reporting on some work that I'm doing with another professor in my department named Alan Glazer. He's a bit of a nutcase. Okay. So here's the classic pollution permit chart, by the way. Okay. So we're assuming that as you abate, as you take away more and more of the carbon dioxide out of the air, the cost of doing that gets increasingly expensive. Okay? It's straight out there. And the way that a permit market would typically work is the government would come in and say, okay, what we want to issue are Q permits. We've decided that, I haven't drawn a benefit line here, but the notion would be, that's optimal. Okay, if we had a benefit line, it would be coming down this way, it would intersect right at that corner. So we want to issue Q permits, and what we would expect would happen is that all the people for whom it's expensive to abate get a permit, all these guys, and all the people for whom it's cheap cut their carbon dioxide. They don't get a permit, they cut their carbon dioxide instead. And the market clearing price is right here at P1. So this is sort of the way a permit market is supposed to work. Okay? And you, in some way or other, you issue those permits, Q permits, and after the dust settles in our market, they're going to be trading at a price of P1, which is the last person, who wants to buy it. This is what's called the marginal. So that's sort of that's the way it works. Now let's suppose we have some technological innovation. What we expect to happen in this permit market is the amount of pollution doesn't change because it's set by the number of permits. Okay, there's no change. We still have Q permits out there, so there's Q tons of carbon dioxide going into the air. Everyone with me? But since we have this innovation, which has dropped the cost, it becomes now much cheaper to abate. The price of a permit falls, and the cost, the people who are abating, of course, goes down as well. So the way innovation policies have largely worked in the United States is they've been based on this idea of what's the value of the innovation is the reduction in cost for people who've done it. So it's this area in here is the technological value of the innovation. It's all the people who've saved money because they're now using cheaper technology. So those are the technology benefits, right? But there's some more benefits as well. All of these guys who used to buy a permit are now paying a lower cost because the marginal cost of abatement is so much cheaper now that they're paying a cheaper price for the permit. And that's what we just call that a pecuniary benefit, which means they've saved money, but as far as welfare goes, there's no benefits here. Okay, there are benefits to them. They're paying less money for the permit. But another way to think about this is that money was just going to the federal government anyway that was using it in some way. But anyway, this is the pecuniary benefits. And all of our innovation policy is devoted to trying to get enough of these technology benefits to the inventor that it's worth it for them to make the investment and come up with it. Okay, risk adjusted and all that kind of thing. So here's the proposal. And this is something that, can I have one more? Yeah, speculate. Okay. Jack Hirschleifer, father of your colleague David Hirschleifer, wrote a very famous paper in 1971 talking about Eli Whitney. Eli Whitney invented the cotton gin, right? And never made any money on it because he got a patent, but it was so easy to copy. Just one look at the cotton gin and anybody could go out and make one in their backyard. And he spent the rest of his life litigating. You know, he died a bitter, poor man because he spent all of his money in court cases. And Hirschleifer wrote this famous article saying, boy, was he an idiot. What he should have done was give up on trying to make any money on the invention, but he knew before anyone else that he had this cotton gin and it was going to make a huge difference in the price of cotton, which was all of a sudden going to become much cheaper because it was way more efficient using a cotton gin than pulling the seeds out by hand. And it should have made a big increase in the price of land on which cotton was grown. There was a whole bunch of prices of things, commodities, that Whitney was in a position to know about before anyone else because he had invented this thing. And so he should have speculated. Instead of bothering trying to make money on cotton gin, he should have speculated in land and cotton and so on. In other words, he should have gotten some of these pecuniary benefits. So here's the way that this could work if you bear with me for a few minutes, okay, suspend disbelief as it were. The idea is if we have this cap and trade system, we now have a commodity market for carbon dioxide, which we don't have now, but it actually is, this is sort of like corn. Once you have a market like that, you can have a futures market. And that means that our inventor sees the price of permits here at P1. He knows that once his invention goes in, especially if the government decides they don't want to support his intellectual property rights, that the price is going to drop to P2. What he can do is sell futures contracts. He could go to people and say, I will sell you, I'll provide you with permits at price P1. And then when the future comes, he can of course buy them at P2 and sell them to you at P1 because you've written this contract. This is the way a future contract works. Okay? So the clever inventor should be able to make all of this money and use that to sponsor his invention instead of using the technology benefits. Now there's actually a lot of flaws in this argument, but I think it's worth thinking about because we're having a lot of trouble with intellectual property here. And as long as we have these markets, I say let's go with thinking about using them to set up futures markets, and that could be a way of trying to support innovation. Now I don't really expect the inventor to have the money to go do this, but one might expect the inventor to have the ability to go to Goldman Sachs, go to a VC, go to one of these people who support these kinds of things, and try to get some money for it. Yeah.
Has there been research in experimental economics to test some of these conjectures?
Okay, not this one, because we just came up with this.
No.
Okay, even though Hirschleifer wrote about it 40 years ago, nobody has taken it seriously. But what there is, there's a lot of research that's been done on inside trading, because the Security and Exchange Commission keeps data about legal inside traders. Okay, so these are people in companies are allowed in many circumstances to buy and sell their own stock. And then 10 days later, the information is issued. And what the evidence shows is that for firms that are R&D intensive, when the insiders are selling, there's abnormal returns 10 days later. Okay, so when the insiders buy their own stock, what happens when that information goes public is that the price goes down. The price goes up. Price goes up. And when they're selling, the price goes down 10 days later. More than you would expect with random fluctuations in stock prices. So there certainly is insider trading going on that helps support R&D and R&D intensive firms. I spent last spring trying to find any evidence for this on commodities markets and didn't. And all I can say there is that maybe there's no innovation going on in sulfur dioxide, which is the only pollutant that we've got a good trading market going in with the futures market associated with it. But it seems like it's a possibility. And I'm sort of sticking it out there. There's a bunch of practical problems. I'm not going to go through the details.
But the necessary condition is a market.
Well, if there's a cap and trade market, then there'd be a market.
Different
Then
market.
you could do a futures market
Yeah,
associated
right.
with it. I mean, if there's a market, you can do a futures market. The Europeans do have both, by the way. They now have a market and they have a futures market. So it's a place to look. I think that experimental work is probably the way to go with it, instead, because it's very hard to get any data out of these guys. And at this point, the markets are very bad. I mean, the Europeans really are very unclear about whether their market is going to survive. I have a model here, which I will load online. I can give you guys the paper. I don't see any particular reason to go through the mathematics. I don't think that that's very useful. Let me go to the, there's actually, what we show is that in theory at least this works, okay? Because the main problem one worries about is once the insider starts trading the stuff, the price starts changing and then he no longer has inside information. But if there's, if there's enough other randomness in the market, things like your business cycles, which probably are going to affect the price of permits as well, then you can show that you can actually, if the inventor can trade on inside information. If he has invested money and his project has worked, then he can trade. Unfortunately, there's another equilibrium. If the inventor invests and his project has failed, he also has inside information. But we'll try to get rid of that one. And here's the point. This is a mechanism that doesn't work for everything, but it works for some really interesting cases. It works for the cases where I'm most concerned about our traditional ways of incentivizing R&D not working under cap and trade. Okay, so it's the big things that might change the price, and that's what we'll worry about. If you have some little invention that doesn't change the price, you're not going to run into a lot of the issues that I talked about. Doesn't require any IP. But really the important issue that we're trying to get at is that there's actually a role here for financial markets in supporting innovation. And what I'm more concerned about is that they're going to get regulated before we even get a chance of getting at it. So if you do things like require a lot of information to be made public, then you can't do this. And basically, I'm trying to get it into the policy discussion that this is another mechanism to try to do something about innovation. As luck, it's my last slide. We can go back to the other ones too. I've been giving this at conferences now for sort of the last year or so, and I have to admit to you guys that mostly we get laughed at. But I think it's serious. We just have to get more evidence.
Have markets historically help innovation, and how does that look like work?
Okay, so now we're talking about here's financial markets.
Yeah.
Right? No.
They haven't, okay.
Well, the thing is they're usually, this is a very special kind of innovation, okay? Usually what we're talking about is something like an iPhone, and there's no market for it because it doesn't exist, right? It's a whole new product, and there's no market, and there's certainly no futures market in it, right? But that's one of the problems with carbon dioxide technology, is that there is this market. It's the permit. And you're not coming up with something new. Really, all you're trying to do, you're still trying to produce electricity. It's the same thing that you always produced. You just want to do it with less carbon dioxide coming out. Okay? So as far as consumers go, all they get out of your technology is a higher price and less carbon dioxide. Okay? It's not a new product.'re not going to be able to convince anyone to get this because it's not a cell phone. It's just a cheaper way of removing carbon dioxide from the same stuff you were doing anyway. That's all we're talking about doing. So in that sense then, there is a relevant market. It's the market for these permits, and therefore you can have a futures price associated with them. Now, the place, so what we have to look at in order to get at this would be what sorts of innovations are associated with really well-defined markets, in which there are also financial markets. Like I said, we tried with sulfur dioxide and didn't get anywhere. Because there's been a permit market for sulfur dioxide since 1990. But most commodities are not areas where you see a lot of innovation. I mean, we're talking corn. natural gas. Actually, that might be a place to look as fuel. It's,
So oil markets,
excuse me?
oil,
Oil markets, well, what we need to find is, I mean, I'm thinking gas, because the price of gas plummeted about a couple of years ago due to a new way of extracting natural gas.
yeah.
Were the guys that were involved in that technology shorting the market? Maybe. They were smart, they were. I'm not sure how we find out. I guess one could try to find out if they did that. This is trading on inside information, and it has a very bad reputation right now in the United States. So part of what I'm trying to do is rehabilitate it as a mechanism to get incentives going here for innovation.
Well, the short trading also probably has a bad rep, but it is a way to bring bad news to markets.
Well,
Trading.
absolutely, yeah. So usually a short trade says, oh, the price is going down, it's bad news. Here, of course, the price going down is good news. It means
Yeah.
you've invented a cheap way to do things. But it's still called shorting the market. It still has a bad reputation. I don't think we've gotten around that. I guess this is a kind of strange idea, but I've got a bottom line, and it is that, at least in theory, financial markets can play a role. We've seen some stock market movements in those directions. I've never seen any evidence for it in actual futures markets for commodities. And we looked. So it's a little worse than that. It's a little worse than that, that I haven't seen it. As I've looked and I haven't seen it. But I think that given that it is, a possibility, that as we set up, if we're going to set up a cap and trade system, first of all, I would like to think about how the perfect cap and trade system might not be perfect in a dynamic framework. So that's issue one. And second, that to be careful in terms of how the financial markets are regulated that are established in conjunction with the primary market, with the permit market, because that seems to me, could be one way to try and get some incentives for it. But they could ruin it. I mean, certainly if they, for example, what I'm assuming is people can trade on inside information. This has, again, a bad reputation. And if all trades have to be, if you have to know who's doing the trades, then you could never do this. Because they come in and say, oh, Thomas Edison's trading. That means the price is going to go down and you're going to make no money. So there has to be, you have to be able to have an actual exchange instead of just bilateral trades between people where commodity future exchanges are anonymous. So you can go to the Chicago Board of Trade and buy futures if you have enough money. Most of the shorting that went on, for instance, in the mortgage market, that ruined the world, so however you want to put it, actually wasn't on an exchange. It was just bilateral deals between Deutsche Bank and Goldman Sachs or AIG. So it's actually, I'm talking about a different situation, because you have to have a way where the anonymous, the inside trader can make his trades before everyone finds out about it. Otherwise they won't be able to make money. But trading on inside information can, I think that the argument here is that this can have some social value associated with it. So we want to pay a little attention to that before trying to make everything illegal. Have I convinced 7 people of the value of this? That's it for the world right now. 8 if Susan's sitting there smiling at me. I guess I have to say I think we have a really serious problem here. We gotta have new technology if we're gonna be able to do something about climate change. That's not one of our, it's a really strong priority. It's too expensive right now.
Well, what's interesting about your idea is that, cap and trade, I don't know all the issues, but it politically seems to be a very hot potato. And
In the US, right?
at least in the US.
Mm.
And whereas you're coming at it from a market force, an incentive to make money out of this in a way that rewards the innovator and also the providers of funds and risk takers in markets,
Mhm.
that has a payoff for solving a very, very complex problem. So that's the setup is very appealing to, I'm an applied economist, so that's very appealing to me.
It's a different way that we can use markets than
Yeah.
they're usually thought of, it seems. In terms of cap and trade being a hot potato, I think it's more that people don't want to pay anything.
Yeah.
Well, if that's the direction we're going, we're not going to get any of this stuff. I mean,
The point that it's
it
not yet-
costs money to control carbon dioxide.
People-
And I want to.
People don't seem to buy into it. I mean, if you look at polls, and whereas right after Al Gore's movie, everybody's like, oh yeah, but now it's really fallen off. Probably a function of, if you will, the economy being so lousy.
Being so lousy. It was, a couple of years ago, it looked like we were going to, right after President Obama was elected, it kind of looked like we were going to get somewhere with this. And actually, that was when I started working on this. I got worried about cap and trade. If I were thinking about it today, I probably wouldn't be thinking about cap and trade. But it does exist in Europe. We may get it in California. This might be our best shot at moving into something. I think we have to keep pushing with the tools that we've got going right now.
Okay, I just
Yeah.
have a quick question. This conversation around use of the financial markets for a way to speculate on the innovation we benefit from, is this conversation happening in a place or with the people who might actually be pushing and able to implement
somewhere.
regulation or the cap and trade or the...
Well, like I said, my co-author and I have not shut up about it in months. And we haven't figured out the best way to, all I can say, because I'm convinced it's true, is we haven't figured out the right way to present it yet. So we're still working on it. This conversation is not happening. It really isn't. I was just at this big conference in Europe and got laughed at again. Well,
Even though they have these markets,
they have markets.
and they're still laughing at it.
Well, they just, so there's sort of two sides to it. They said, the prices are never going to go that low because the government wants to support the prices. I said, well, fine. If you can argue that the government's going to support the prices, then sure, let's use patents. I'm not going to worry about it. But then they say, oh no, we're not going to support the prices. They're going to crash. I said, okay, let's play both sides of this. This is what hedging is all about. Get a patent and cover yourself on this market. And then you can, that would be, now we have a strategy, right? We can do both. I think, it's one of those things, I feel like a lone wolf right now, and I'm sure that's not true, okay? I'm sure that there's got to be other people talking about this, but I haven't run into them. And maybe I've been talking to the wrong people. I spend too much time with economists and not enough with business school faculty, because you look comfortable with this. I think this whole notion of financial markets is something that, like you said, applied economists who work with this stuff, yeah, it's fine. There's not a problem here. But most of the people who are working in climate change aren't looking at that. They're still concerned, part of this, and there is this discussion going on about problems with actually getting technology to happen, getting innovation, and that absolutely is going on all over the place. And the conversation as of a year ago was, that's why we need cap and trade, because we need to get demand-induced innovation. The government on its own isn't going to be good enough. the conversation has really shifted in the last 12 months on people who do policy like this. I'll talk anywhere. We're still trying to get it published though, so we haven't, this is early research, and I'm sure there are other people doing this, we just haven't run into them yet. Like I said, we have found people who've looked at the use of stock markets and insider trading in stock markets, but that's really quite different. I mean, that means it's for just normal returns in a company.
Sure.
I mean, you can, if you know that, actually, it is kind of interesting because it means that you can make money before you have the product. So this notion of once Apple realizes they've got a great product in the iPhone, they're going to go long, right? They start buying. And they can start making money on it well in advance of actually introducing the product and selling it. Because people start observing that the insiders are buying stocks in Apple. Then the price goes up, and then they can sell their stocks and make some money. So it does, I don't think that, the full implications of this have really gone through in policy, that if you allow insider trading, it might actually, there's a lot of areas where it could loosen up the kinds of constraints that I was talking about. Stock markets are great.
Well, Jack's son David would say they're anything but perfect.
Yeah.
Or let's say, he would say they're really dumb, and then at other times they're really smart.
Oh, really?
Well, that would be my words that I would put in his mouth.
There's certainly a lot of noise.
Well, there's also
There's a
biases.
huge amount of noise, and the stocks of a given company have something to do with the value of the company, and a lot to do with all sorts of other things going on. But that's one of the reasons we can trade inside, because there's enough noise to hide your information behind. I have, one of the things that I was going to give you that I didn't get around to preparing was kind of a bibliography of people who've written about a lot of this stuff, market failures, so on and so forth. So I'll give you that. You can post it, and I wanted to clean up my slides a little bit. I was really burning the midnight oil last night, and then I'll send them to you if you want to do something with that as well. Okay. And anyone here who wants to talk to me about any of these issues, this is what I do all the time. I'm having fun. So come by or send me an email.